Good morning, wherever you are. Good afternoon, good evening, good night. Que sera, sera. It's time for another pre-market post scan with yours truly, Dex, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com. Another day, another dollar. First things you need to do is smash that like button, share the video, subscribe if you haven't, hit the little bell icon. You know what it is. You never know who the video may encourage or help. And you know you thirsty. You just woke up. You just rolled out of the bed. You need yourself a six-pack. Come on over to PulseWaveTrading.com and get yourself one and get one for a friend. You can get started trading with us for as low as $69 a month and come break bread with us. All right? Come get some money. Come get this money. All right, so first things first. We have another day. We have another dollar. We have more news to talk about. So right now, as it stands, stocks climb after Joe Biden wins big on Super Tuesday, but analysts warn the rate cut sell-off is a huge red flag. The Federal Reserve's 50 basis point bazooka is merely a pop gun in the face of a virus that doesn't care what the borrowing rate is. I have to second that. I believe that was ineffective, that rate cut, and that the markets are still very much in trouble. Lyft posted record sales last week, and coronavirus might be the key driver. If you have to get from point A to point B, you begin to second think any sort of situation where you're going to be crammed into a bus or crammed into a train or a subway. Like I was saying the other day, people still going to be moving about. They're not staying in the house. Airlines rush to boost demand as coronavirus shreds playbook for crisis management. The rapidly spreading epidemic is complicating airlines' standard strategy of lowering fares and redirecting flights to trouble-free areas. Like I told you, planes are still taking off, folks. Bill Ackman hedges to protect against coronavirus negative impact. We have taken steps to protect the portfolio from downward market volatility, the billionaire manager of Pershing Square said. Fed's economic survey is set to offer more clues on coronavirus impact. The central bank's report should provide insights into how the epidemic is affecting companies. Supply chains and economic outlooks. Wall Street prepares as coronavirus gets closer to home. JP Morgan, Goldman Sachs, and other banks are taking precautions such as restricting non-essential international travel, postponing conferences, and asking employees to work from home. Very interesting developments. Lego Classies build growth for Danish toy maker in a shrinking market. Model fire stations and garbage trucks fueled a 6% rise in the toy maker sales last year, up from 3% growth in 2018. Why people still play with Legos? Really? Really? Interesting. Stocks have rallied. In Europe, Germany's DAX rose 1.6%, Britain's FTSE 100 rose 1.9%, and the Euro stocks 50 rose 1.8%. In Asia, China's Shanghai Composite rose 0.6%, Japan's Nikkei inched up 0.1%, and South Korea's Kospi rose 2.2%. U.S. stocks are set to open higher, with futures underlying the Dow Jones Industrial Average, S&P 500, and NASDAQ up 2.4% to 2.7%. So major earnings are coming out. Splunk and Campbell Soup are two of the highlights. Key figures on the way. ADP payroll data is the headline act. Very interesting turn of events. In other news, WHO urges people to go cashless because dirty banknotes can spread the virus. Following reports that Beijing had quarantined dirty cash, the WHO warned on Monday that the virus could survive on banknotes, potentially spreading COVID-19 within communities. and across the world. To reduce the risk of being infected by money, the NGO advised citizens in countries struggling with outbreaks to favor digital payments when possible, the Daily Telegraph reported. That the WHO is telling people to avoid cash is hardly a surprise. Research has found that coronavirus has been found to live on surfaces for as long as 9 days. During the statement, a WHO spokesman referenced a Bank of England study claiming that banknotes can carry bacteria on viruses and urged people to wash their hands. Other studies have shown that 90% of US $1 bills had bacteria present, and one Swiss study found that viruses had survived on the faces of Swiss francs for days. Dun dun dun. You know, it's funny how the fangs of the snake always come out right before it's about to strike. Yeah, that's right. They've been trying to go cashless for a minute now, getting everybody prepared incrementally over time to go and move in exactly that direction. They always want you to move in the direction they want you to move in, and so they have to give you a little nudge to get you there, regardless of the tactic. Now, here's a good one. Tesla downgrades hardware on new Model 3S in China, then delivers them anyway to unsuspecting customers. No wonder Wall Street likes this stock to rally. It likes deceptive tactics. It looks like Tesla may have finally found a way to use up all that old, unused inventory that's been sitting on the company's balance sheet. Make new cars with old parts and blame the coronavirus. At least that's exactly what it appears the company is doing in China, according to a recent report by Zunia. I'm probably messing that up. It's Xinhua. Zenua, I guess. On Tuesday, the news broke that Tesla was downgrading hardware on its China-made Model 3 due to supply chain status amid the epidemic. And then it promised free upgrades to its customers. Instead of just doing the right thing, which would be suspending production until you can make the product properly, Tesla is doing what it does best. Wow. The report points out that some Chinese consumers were noticing that the hardware in their newly delivered Tesla vehicles was inconsistent with their orders. Tesla responded by saying that hardware 2.5 had been installed in some vehicles that were promised hardware 3.0. See, we talked about this before. All right. I talk about it all the time, as a matter of fact. How companies knowingly and willingly put out inferior products, unfinished products, knowing that there are bugs and glitches in it, and they put it out anyway just to make money, keep that money flowing in, even though they know in their hearts that it is garbage and that it's not ready for production, that it's not never going to be ready for production, and they just put it out there anyway, hoping that they'll be able to deal with the blowback, hoping that most people aren't going to say anything and they'll just deal with it. And that's really what they're banking on. So I'm just putting it out there for you that this hasn't changed. Greedy corporations still want to fleece the public. They are no better than snake oil salesmen. They'll give you something in a very pretty bottle, make the color of the liquid attractive, sprinkle some perfume in there to smell good, and tell you that it cures cancer. Right? That hasn't changed, folks. It's just that we're in a technology era now, the information age, and so everything's technology. It looks good, it's pretty, but there's no steak. It's just sizzle. Smells like steak, but there is no steak. beyond all the smoke and sizzle, there's nothing. All right. And that's what we're seeing right now. That's the real reason why the global economy is in trouble, is because of the cheap um, parts that they're using to make stuff. All right. They figure it's greed at the end of the day. They want to make even more money. And the best way to do that is to deliver the cheapest product at the cheapest price possible. They're just looking at the profits. All right. They don't do anything without calculating the profits first. It used to be the other way around. You move a little bit slower because you want to put forward the best product that represents your name, the name of the company. You want your company's name to be synonymous with quality and integrity. And that by putting out the best product on the market, that making oodles of money is a consequence for doing good business. But now we've gotten into the shameless society where there is no shame in anything, good or bad, right or wrong. So if you're doing wrong, don't judge me. And so you don't have to blush, because you can still walk away with all the money you made, and you don't have to pay, any reparations or any restitutions or anything like that. So they say greed is good. They say that it's good to, you know, make a lot of money, and I have nothing wrong with making a lot of money, but you don't want to do it under the umbrella of deception. You don't want to use deception to make money. You want to make money because you have the best product on the market. And when people buy your product, you want them to feel a sense of accomplishment, achievement, and satisfaction. That's what is now missing. It used to be that way. When you would buy a product, the company would stand behind that product because the company went through great pains to make sure that the product that was being delivered to the customer was 100% approved and it met all the specifications and requirements, and you could sign off on it. Remember, some commercials would lead in with that. When you would see commercials on TV, you would see, I think it was, I don't know if was it Hanes? Because remember, there was the underwear wars for a while. You had Fruit of the Loom versus Hanes, right? And Hanes came out, I think it was Hanes. Y'all can fact check me if I'm wrong here. Correct me. But I think it was Hanes that broke it down to the actual individual who made your particular pair of underwear. So they were accountable. They say, look, we're making ourselves accountable down to the actual person and the manufacturing plant that actually made this particular pair of underwear. And they will give a number on each pair of underwear. There was a number that referenced an employee who worked in the factory who actually signed off on it. So if there was something wrong, they could trace the problem all the way back to the individual that made it. And they were saying, look, we have character and integrity, and we stand by our product. And if there's something wrong with the product, we can get right down to it, down to the actual person who made it, referencing the number on the inside seam of the underwear, of the drawers. Okay. We've gotten away from that. We don't do that anymore. All right. And it used to be something too, made in America. It meant something, it meant quality. It meant, you know, that this was done with an expertise touch to it. And you paid a little bit more, but you got that good quality. Then that just died. It went out the window. It went out the window. And now it spread like a fungus over pretty much the entire spectrum of commerce, where quality service is an alien concept, and you no longer get good customer service, and you're not really getting good quality. They figured out a long time ago that whatever is man-made should have a very short shelf life and a very small window of use so that it breaks down over a shorter period of time, thus causing the customer to have to come back to replace it with a newer one. All right. So, we get into this planned obsolescence, and that's what we're dealing with, planned obsolescence. And it's gotten worse over the years, and the window of obsolescence has become narrower over the years. So that now, if you buy a computer today, by next month it could be obsolete. Because what they do is another tactic that companies have been employing, figuring out, okay, well, we have this new model that we would like to introduce to the world, but hold up, we don't like our numbers on the last model, and we got all this glut of inventory, so let's move this inventory. So what happens is they'll push the old inventory, they'll mark it down, they'll have this fire sale thing going on so they can move a lot of that product, right? And then right after that, bam, they hit you with the new one. So what have they just achieved and accomplished by doing that? Well, it's almost getting 1.5 to twice the money. You went ahead and moved the old inventory, took in money for that. Then you rolled out the new model, which of course costs sometimes twice as much as the old model. So now you're getting people to spend twice. All right. They went in because it's like, ooh, I'm getting a discount, but then they're gonna come right back the following week and buy that new product too. They do it all the time. Game manufacturers and video game system makers do it too. Like for instance, we don't know when this new PlayStation 5 is coming out. We were told it's coming out, but we don't know if it's coming out. So I'm gonna tell you what they're gonna end up doing, because game developers do it too. Now, as you know, 2K puts out a new game every year, right? So here's what's gonna happen. They're gonna make the game for the current gen, for the PlayStation 4. And then, like right after they sell a bunch of that, then they'll be like, oh, guess what we got? We got the new system out, and we got the new 2K for the new system. So then you're gonna go out, you're gonna buy that again too. Instead of saying, nah, we know that this new PlayStation's about to drop, let's chill, and then we'll just hit you with the new joint. Nah, they gotta get double the money. And that's kind of the way things have been going. And because no one really notices or talks about things too much, it just continues to perpetuate. And that's what we see going on here too, even with this coronavirus. Now, a lot of information has been coming out about this. It comes out every day. And the reason why we have to keep talking about it is because it affects our business. It affects the markets. That's my space. I deal with these markets. So anything that affects these markets, I have to deal with. I can't avoid talking about it because it directly affects what we are doing. It affects our livelihood, which is these markets. So you have to do what you have to do, right, to keep a certain narrative going. So when it comes to these markets, we knew that we have been in a incredible bull market for an extended super amount of time. Now, we knew that the bear was coming at some point. We didn't know what was going to be the issue to help put us there, but nevertheless, this whole pandemic fear thing is here, and we have to deal with it. We can't avoid it. It's not going away. It's in our face, So, what do we see happening here? We have a lot of things happening here. It's almost like this whole coronavirus, it serves two masters, and it serves dual purposes. On one hand, it's creating fear and panic, and it's causing people to move in a certain predictive manner. It's actually helping the economy, not really hurting it per se, or certain parts of the economy. Because if people are buying up all the toilet paper and all the hand sanitizer and all the masks, that's causing those manufacturers to make a lot of money all at once, all of a sudden. Normally, you could go to the store and there'll be plenty of bleach and Clorox sitting there on the shelf. Now there's none. That helps them out. That's money going into their pocket, right? So it's not necessarily all bad. However, it serves another purpose because it can be used as a scapegoat, right, for covering up wrongdoing, for covering up losses, for covering up, terrible earnings, for cover. It can be used to cover a lot of things. It is the quintessential perfect boogeyman, because now all you have to do is say the coronavirus did it. It's a 5-alarm fire at the skyscraper. The coronavirus did it. The perfect scapegoat. Everyone can point to it and say the coronavirus did it. And then when the smoke clears, it's going to be so much, everything, all the information is jumbled, and you can't even really pin down certain things because everyone says the coronavirus did it. And when everything implodes, you don't want to go through the hardship of having to, remove all the debris and trash and get to the actual, investigation, because it's going to take too long. So it's easier just to say, hey, everyone agrees that it's the coronavirus. The coronavirus did this. And it had nothing to do with it at all. I believe the coronavirus is manufactured crisis to mask and cover up the financial crisis. In my opinion, the financial crisis never went away. The 2008 crises was just the manifestation of the 2000 crises, which was the precursor to the 9/11 financial crises, which was the onset from the 1994 recession and financial crises, which came as an infection from the 1987 crash, which was the great-great-granddaughter of the 1929 crash, which was the cousin of the 1909 and the 1894, I think it was, financial situation. So really, we haven't ever gotten away from the financial crises. It's the same financial crises, just metastasizing itself. It's never gone away. It was never cured, disinfected, or cleansed. It's always been here with us. It's just that they've been able to mask it and kick the can down the road so far that people lose sight of it. What am I saying? I'm saying the financial crisis is none other than your central banks. Your Federal Reserve is the crisis. It's the real cancer. It's the real coronavirus. All right? It's the Federal Reserve. It is the central banks. They don't want you to focus on that infection. That infection, you can trace everything back to that infestation. All right, to that snake bite all the way back to 1913. Look at all the financial crises that have hit since 1913. And then go back 100 years prior to that and look at financial situations. You will not be able to find it. The boom and bust that we have seen since 1913 have been numerous. And it's all been because of the central bank and Federal Reserve. All right? They will argue, no, we have staved off financial disaster because we exist. No, you're a cancer. And cancers have to be burned out, cut out, irradiated, eradicated out of the body. And until and when countries realize this and take back their sovereignty to print their own money, we're going to continue to have these type of financial crises. And now that we have a global market, it accelerates these crises. Is everyone following and tracking with me? Let me show you something here. This is going to make you scratch your head a little bit. Here is our overnight markets. Now, the bell just rung, but just take a look at what we got. So far, the Dow is now up 717 points, right on the open, 26,601. NASDAQ 100 is at 8771 half. S&P up 70 and a quarter at 3066 half. That NASDAQ 100 is almost up 200 points now, 185.50. Russell's up 33 at 1512. Bitcoin, though, only up $55, struggling to hold the $8,825 handle. Nat gas up 4 cents at 184. Your oil, though, crude oil is up $1.22 at $48.40 a gallon. Your long bonds at 172 and 13/32. Your gold is now down $4.60 at $1,639.90 an ounce, after it topped out at $1,654.30 an ounce. Look at your silver. Silver is now down a nickel at $17.13 after topping out at $17.33. Dollar is up 42 cents now. Look at the swings here. It dipped down to 97.11, now it's at 97.58. And that made your euro and your British pound sterling go negative, down 80 and 7 pips respectively, at 111.06 for the euro and 128.08 for the sterling. And the Aussie is up 17 pips to 66.15. And then look at your food. Your beans are up 4 1/4 at 907 3/4. Your corn's down 1 3/4 points at 379.75. Now, I thought that this coronavirus is supposed to have such a negative impact across, sectors, but instead we see that knee-jerk reaction I told you about last night in the end of day report, how sometimes there's a delayed response to these interest rate surprise cuts, and that's what you're seeing right now in real time. You're seeing that late knee-jerk reaction to the rate cut. So here's what's going to happen. You're going to have to watch this as we go throughout the day. You're going to have to look at these inverse ETFs, DXD, QUID, and SDS, because they're going to show you clues as to what is happening with the scope of this rally. You're also going to have to pay a close attention to the bonds, particularly the TLT. That's going to be very telling today as well. Gold, not so much per se, because that's going to be a challenge right now as to what the world truly believes. Is interest rates going to start going up? If so, gold should get really strong here and just explode. If they believe rates are going to be closer to zero and may even threaten to go negative, then that's going to cause your gold to go down. It's a weird type of thing right now. Sometimes gold acts like a currency, other times it acts like a commodity. Well, with a stronger dollar, that hurts commodities. It makes commodities get weaker in their price action. Case in point, gold is down, so the dollar is up. That's putting pressure on your commodities. So it should make soybeans and corn weaker. And if gold is going to act like a commodity, it's going to make gold weaker and put pressure on that gold and prevent it from rallying. Now, here's the weird part. As gold falls, your gold miners, the GDXJ, will probably catch a bid because it's going to start behaving like a stock today. All right. So what does this all mean and where do we go from here? I'm here to say that whatever you see in today's rally is probably only going to set up our next leg down. I don't like to be the bearer of bad news, but what do you want me to do? What do you expect from me? I have to give you the real. I have to give you that raw. I have to give you the authentic. And right now we got crash alerts on the Dow, the Bitcoin futures composite, the E-mini S&P 500, the NASDAQ 100, and we got rally alerts for the oil. As oil continues to climb, it will also put pressure on the dollar and the other things of that nature. Oil is acting different today. I know it's been oversold just like the stock market, but it's rallying today. Oil is supposed to be a commodity. It should be under pressure if the dollar is going to rally today. Instead, it's acting like a currency. It's rallying, and it has a rally alert attached to it today. And that's exactly what it's doing. But I think it's only setting up for another leg down too. Very mixed, confused markets right now because the markets don't know what they want to do. I got rally alerts in gold, rally alerts in silver as well, but because of the stronger dollar, it's causing the gold and silver to act more like commodities instead of a currency. So you have these real mixed emotions today in the market. What am I going to do? That we flow into that now. What am I looking at doing? All right, so I'm in a wait and see right now. I'm currently sidelined. I have no working orders going on at the moment, but I am looking at these crash alerts in these markets to see what we do. I think the close today will be important. I think it will be very important because of what has transpired with the rate cut. Is it going to help? Yesterday, it didn't. The reaction of the market was muted. For instance, look at OIH right here. It's at $8.82 a share, right? And now we have a crash alert from having a rally alert the other day. The market failed the rally. So technically speaking, you can make the argument that if OIH rolls over, then you're going to see oil roll over with it. So it's a really weird market right now, and it doesn't make a whole lot of sense. I don't know if I would want to be long the market today. Now, I know you can only trade what you see. And for those of you that have your PulseWave price trigger reports that you got last night, if you take a look at the things that I'm saying, look as it on the report, I think you will find that what we see, the activity in the markets today, is suspicious. So here's what I'm looking to do. This is how I'm looking to maneuver. Now, I do have to push away after this, in this broadcast. I have to step out. I got some things I got to handle. But when I come back, I'm going to tell you what I'm going to be looking to do. I'm only looking at the weekly perspective today. So I'm looking for the intraday price inflection points from the weekly perspective, whether that be getting long or getting short. I will be looking to get long or short according to the weekly intraday price inflection points, not the daily. The daily right now is too volatile. It seems like the markets are being driven by every news report that comes out of here. So I am only looking from the weekly perspective to get involved today. Nothing more, nothing less. I can't do anything else. I'm not going to do anything else. I can't do it. And I think that would be suicide to do anything else. Now, for those of you that can set in front of your screen, you don't have to do anything today. Then that's cool. Go ahead and stick with the daily roadmap. There's no harm in that. But for me, nah, I'm gonna have to look at the weekly perspective on that one. I'm taking the weekly. I don't have a choice. I gotta look at the weekly. So that's what I'm doing. I'm looking at that weekly, and you know what I'm talking about. According to the reports, there are 2 different price inflection points you get every day. There's one from the daily perspective, and then there's one from the weekly perspective. The daily perspective is a lot faster, it's a lot quicker. We call that our loaded price trigger reports. All right, so the loaded price triggers is based on the daily perspective. All right, the other is the weekly perspective. It's a little bit slower, but it's longer term looking, forward thinking, and it tends to be a lot smoother when we have trending markets. The drawdown to the weekly perspective is that you will be trading less, but you'll be in the trades a lot longer. The daily perspective, you're in and out because they're loaded price triggers. They're based on the real-time intraday price inflection points of where the markets are and what they're about to start doing. So if you got time to babysit a little bit, go ahead and use those loaded triggers. If you have to work and got things to do, I highly recommend you use the weekly perspective. Okay, that's how you do that. For me, I don't have a choice today but to do that. Now, I'm not putting anything to work right now because I need to check some other things. But for those of you who have the ability, go ahead and you may want to consider using that weekly perspective today. All right, just to be on the safe side, because we're going to need at least a day for the market to digest that rate cut yesterday, that surprise, and to digest what that is truly going to mean for the markets. And right now, I have to tell you, from where I'm sitting and what I've been looking at, it's looking like today's rally is probably going to get sold heavy, by Thursday, Friday time frame. Just saying, just putting that out there for y'all, okay? With that being said, I'll see you guys when I get back in the trading room. And the rest of you, I will see tonight with the end of day report. Don't play yourself. You need to go to PulseWaveTrading.com. I don't see how in the world you navigate these markets without the daily PulseWave price trigger reports. I don't see how you do it. You need an algorithm to stay ahead of the game and not get your face ripped off. All right. You got to be able to be in a position to make money and generate income in these markets. So trade with a pro. All right. Come chill with me. Break bread with me. And let's do this thing. All right. So with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.